Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the outlook for interest rate cuts in 2025. Now, if you've been following this channel, you know that in the last few weeks, we've had a plethora. So many lenders have cut rates this week. I'm going to talk about why that's happening, what the expectations are going forward. Are we going to continue to get mortgage rate cuts this year? Because the Bank of England is likely to cut, but you really don't care about that. You care about our lenders. The mortgage rate that you can get, is that going to drop more in 2025? Well, I'm going to give you an update on all of that. If you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 41,000 subscribers. Or we might have just hit that and on the way to 42. You can see yourself somewhere around this video. And let's get some more views on this channel by smashing like, tickling like, doing something to the like button. That massively helps me with the YouTube algorithm. And I appreciate everybody that does that. So thank you for doing it. So what's going on? Well, look, interest rates have been falling. And this happened last year. So last year in 2024, rates were fairly high and they sat there and it slowed the market down. People weren't buying property because of it. And so lenders started cutting rates in the summer of 2024, even before the Bank of England cut, in order to stimulate the market. Now we've got something different going on. The market's been very busy in the first quarter. And that was due to the fact that people wanted to beat that stamp duty increase. But now we're in a slow part as well. So the market has slowed down. We're expecting in the next month, the next 9 months to be as busy as the first 3 months, which is a massive slowdown. And so lenders now are considering, should they cut rates? Now, there's a few things that we've got to contend with here. Firstly is inflation. And so inflation's all over the place. It's up, it's down, it's left, it's right. It is all over the place. The forecast from the Bank of England is that it will be back up to 3.7% by the end of the year due to energy costs. Also, we've got to contend with the tariff war at the moment, and that could increase inflation in the UK as well. If we put retaliatory tariffs on America and we import from there, that could be a problem. You could find products that we import from Europe also having all sorts of cost implications because, yeah, maybe we buy fruit from Europe, but maybe the tractor that they need to make it or some chemicals or fertilizer they need to use comes from America, and that's tariffed. So it's a lot of uncertainty on that at the moment. So the inflation is expected to go up. But here's another thing that the Bank of England's got to contend with, and that's the economy at the moment. And so the economy at the moment isn't very strong. It's very close to being in recession. The USA has already had a first quarter contraction of 0.3%, and it's very likely that the next quarter won't be great with all this tariff uncertainty in America. And if the economy drops and starts looking bad and unemployment starts to rise, then the Bank of England and the Federal Reserve would cut rates in order to stimulate the economy. But now you've got two problems, haven't you? You've got rising inflation, which you deal with by hiring rates, but you've got economy that's going down at the moment, and we call that stagflation. So it's a difficult decision for the Bank of England. But in more recent times, they've always said, we will focus on inflation first. But now they've changed their story, and they're starting to say, we will also be looking at unemployment and the economy as well. So there's two things that they're considering. Now, the UK figures aren't particularly strong, and we're expecting on the 8th of May that the Bank of England will cut the base rate by 0.25%, a 0.25% drop, which is good. And we can do that. We've got that luxury. You see, the Bank of England like to have interest rates close to the Americans, the Federal Reserve. And so the Americans are at 4.25, we're at 4.5. So we can cut once and be in line with the Americans, and it doesn't matter if they don't cut. So that's good. So what expectations do we have for further cuts in 2025? Well, the Bank of England is likely now to have 4 cuts in 2025. 4 interest rate cuts in 2025. That's good. So that would take the base rate from, they most likely would be 0.25% each time. So it would go from 4.5% to 3.5%. Brilliant. Now, if you're on a tracker rate, that will instantly, in your next month payment, knock down the payment, and you will benefit greatly from that moving in the right direction. Brilliant for people on tracker, but not everyone's on a tracker. So what we've got to consider next is the banks that we borrow at. What's the consideration that they look at? Well, they look at something called a swap rate. It's called the SONIA swap rate. And that's a rate of interest that they get from a bigger bank. And so HSBC and these sorts of banks will borrow from a bigger bank. And that is likely to go down that rate if the Bank of England are forecasting cutting rates. And so we've seen that this month. So although the Bank of England hasn't cut yet, the SONIA swap rate went down. That allowed lenders to cut prior to the 8th of May meeting. So what's likely to happen with these 4 cuts is the SONIA swap rate would get close to that 3.5%. And that means that lenders will be able to cut mortgage rates to you. So what do I expect? Well, right now you can get deals at 3.79%. I've just recorded a video this week on that. Who was that with? Halifax. So Halifax have got a rate at 3.79. That's the best rate in the market. But there's about 14 lenders now that are below 4%. I think that if the SONIA swap rate and the base rate get to 3.5%, because banks also make money on fees, I think that the rates that you're going to start seeing, the best rate by the end of 2025, I think will be 3.25%. That's my prediction on where rates will get. I think that by the summer, you'll start seeing rates at around 3.5%, which is so much better than we had 2 years ago under Liz Truss, where we had that mini budget and rates went up to 6.5%. Now, it's not as good as where things were, but it's definitely moving in the right direction, and that's going to improve affordability. It's going to make specifically buy-to-let landlord a little bit more happier because they pay interest only, and it impacts them massively on mortgage rates. So I've got one buy-to-let mortgage with a 6% rate. So if I can refinance that down to 3.5 or 3.25 at the end of the year, I'll take that all day long, and that will halve my payments pretty much. And that's what we want to see. And so rates are a funny thing. They take a while to move. It's not going to be as dramatic as people think. You're not going to see it go from 4.5 to 2% overnight. It will take time unless we suddenly go into some deep, dark recession or some massive financial crisis. Then things might change. But my prediction is by the end of 2025, and that's revised down. I said 3.5% a few months ago, but looking at what we're looking at now with the tariffs and the economy and all this stuff that's ever evolving, I think the best rate you'll get this year is 3.25%. Maybe check this video back at the end of the year and let me know if I was right. Do comment below. What do you think rates will get to? It's really important that we all have a nice conversation about that in all the comments. Do smash like, do subscribe, and check out in the description the fundamentals of property investing. Will teach you how to find properties below market value, how to refurbish them, how to price that, and then how to list the properties, and making sure that you get a high cash flow strategy on the back of that, like HMO, like serviced accommodation. It's £30 the course. That's a one-time payment, and it's got all the information that everyone else charges thousands for. So click below and grab that. Do check out all the other content as well on the channel, including this video right here.